Internal influences. For more videos like this one, please visit www.sensebusiness.co.uk. Internal factors such as the skills and motivation of employees and the impact of good financial management can have an effect on the success of a small business. There are lots of factors that can affect the success of a business. Internal factors are those which the business has some control over, such as finance and employees. If a business is to be profitable, it is important that its finances are properly managed. This can be done using the following tools: cash budgets, break-even charts, and job costing statements. A cash budget is a document produced to help a business manage their cash flow. It is important that businesses have enough cash to pay their employees, buy supplies, and cover business expenses. The main items shown on a cash budget are the opening balance. It is the amount of money available at the beginning of the month. It is the same amount as the closing balance from the month before. Receipts, a list of all money expected to go out of the business such as rent, wages, or electricity. Closing balance, the cash balance left at the end of the month after all payments have been taken away from the business receipts. This following table is an example of a cash budget. It's a cash budget for Treats Coffee Shop. It shows the opening balance, the receipts, the sales, the payments, the supplies, the coffee machine purchase, rent, wages, and closing balance. As you can see, this table has a closing balance in negative. There are many reasons why a business may have a negative closing balance. The purchase of a new asset such as a coffee machine or delivery van, more money going out of the business than coming into the business, an increase in the cost of supplies, a decrease in sales, or an increase in business expenses such as staff wages. Break-even. A business needs to calculate how many products they will have to sell to make a profit. Break-even is when a business has sold enough products to cover all their costs. Costs can be split into two types: fixed costs and variable costs. Fixed costs are costs that do not change with the level of production, such as rent. Rent will be €1,000 if one item is produced, and it'll remain €1,000 even if 500 items are produced. So rent on a property such as a factory is a fixed cost. Variable costs are costs that change with output, such as raw materials. If the ingredients to make one cake cost €5, the variable cost for one cake would be €5, but the variable cost for 10 cakes could exceed up to €50. So the materials such as ingredients are variable costs. More are needed to produce more products. Total costs of a business are the fixed costs added to the variable costs. A business needs to be able to pay the total cost of the business before it starts to make a profit. At the break-even point, a business will make neither a profit nor a loss. Break-even chart. Break-even charts can be used to show how many products need to be sold for a business to break even. The following chart shows when a business will make a loss, a profit, or a break-even point. The point at which the sales revenue line crosses a total cost line represents the break-even point. Any level of output below the break-even point would mean the business is making a loss, and a level of output above the break-even point will mean the business is making a profit. Job costing statement. Sometimes businesses need to calculate the cost of completing an individual job or task. For example, a painter and decorator would need to work out how much will it cost them to complete a job so they know how much to charge the customer to make a profit. An example of a job costing statement is shown as follows. We have cost for paint and supplies for the job $350, the wages of decorator $100, hire of ladders $50, and the total cost of $410. There's a profit of $90, giving us the customer price of $500. Employees. If a business is to be successful, it is important that it has good employees. If employees are not able to do their jobs properly or do not have the required skills, the quality of the product or service can be affected. There are many methods used by a business to ensure employees are able to complete their jobs effectively. These include motivation, appraisals, training, and team building. Motivation. Motivation is what gives employees the drive or desire to do well in their job. If a company's employees are motivated, they will be more likely to apply themselves and take a greater pride in their work. Many methods can be used to motivate staff. These can be split into two types, which are payment systems and non-financial benefits. Payment systems that can be used to motivate staff are bonus. Employees are paid an additional amount on top of their basic salary for achieving targets set by the organization. Profit sharing. Employees receive a share or percentage of the profit made by the organization. This can motivate employees as the more successful the organization is, the more money the employee receives. Pay rise. Employees can receive pay rises for working hard or remaining loyal to a company. Non-financial benefits. Non-financial benefits that can be used to motivate staff are promotion. Employees who are able to see a clear promotion route available within an organization are more likely to work hard and to be motivated to succeed. Training and staff development. Employees who know that an organization is willing to invest in their training and development will be more motivated to work well for the organization. Flexible working practices. This gives employees a degree of choice over where, when, and which hours they work. There are different types of flexible working practices such as job share and home working. Staff social events. Social events such as staff parties and quiz nights can help employees feel part of a happy organization. This can make them more likely to work hard for their business. Appraisals. An appraisal is a meeting that takes place between an employee and their manager. It is to discuss how well the employee has performed over a certain period of time. An appraisal can be used to identify the training needs, to identify the employee's strengths and weaknesses, set targets, discuss pay rises, discuss opportunities for promotion, and improve motivation. Training. Employees need to have the required skills to complete their jobs to an acceptable level. Having employees who are not trained to do their jobs properly can lead to poor quality products or services being delivered to customers. Regular training is beneficial for the staff and company. There are many benefits of investing in staff training. The employees feel valued. Employees who know an organization is willing to invest in their training and development will feel valued and more motivated to work. Good reputation. Well-trained staff will be capable of dealing with the customer inquiries correctly and provide a high-quality service. Customers will get a better experience and recommend the company to others. Improved production. Training employees to do their jobs properly will lead to fewer mistakes in the production process and therefore less wastage. Retain good employees. Employees are less likely to leave a company that is willing to invest in their training and development. Up-to-date skills and knowledge. Keeping employees' skills up to date with new technology can make the company more competitive. It will also ensure that all employees have the required knowledge on the most up-to-date workplace legislation such as health and safety procedures. Team building. Team building is the process of getting a group of individual employees to work effectively together. If a business is successful in building a team, it can lead to a more motivated workforce. Employees will feel a greater sense of belonging and commitment to the company. It can also improve communication within the business. Thank you for watching. For more videos like this one, please visit www.sensebusiness.co.uk.